So in this video, I'm going to show you exactly how you can build a high credit score as fast as possible. And look, if you've seen videos on this channel before, you'll know that we're not big advocates for borrowing money. I don't like having a lot of credit cards. I think that in general, debt and credit cards are bad for society, but I think having a high credit score is a tool that you can keep in your back pocket that can actually provide you a lot of value. Even if you're someone who uses debit cards, uses cash regularly, you don't like a lot of debt, that's understandable, but I think it's good to have a high credit score because it can provide you some value in a number of other areas in your life. So let's discuss that in this video, the different value that it brings for us. But really primarily what we're going to discuss is if you have a low credit score, a bad credit score, how you can boost that score as fast as possible. And there's really 5 key elements that go into determining your credit score. And once you understand how they determine your credit score, you're able to start working towards that, fixing those holes, fixing those problems that you have, and just bettering yourself financially when it comes to your credit score, okay? And credit scores, they're very important. We can't just ignore them entirely because what it does is it shows your ability to borrow money. Now, in a lot of cases, showing your ability to borrow money is only used when you're trying to borrow more money, like if you're trying to buy a house and you need a mortgage or an auto loan. So if you just don't want to do any loans at all in your life, then that's understandable. But for most people, they're not going to have $200,000, $300,000 in cash to pay for a house, so they might want to get a home mortgage. That's understandable, especially if it's a low interest rate of 3% or 4%. But if you want those low interest rates, you're going to need a high credit score because if you have bad credit, if you default on your loans, if you're not good at paying your bills, and you want to go buy a house, well, you're going to be hit with a massive high interest rate, and that goes for auto loans as well. If you have bad credit, you're not going to be able to get a low interest rate on those auto loans, on those home loans, even on those personal loans, which I don't really like, but there might be a time in your life where you want to borrow some money, and it's good to have that tool in your back pocket of having that high credit score. Hopefully you see where I'm coming from here. But it can also actually be useful in cases where you're not ever planning on borrowing money. You know, when I was applying for some apartments back in the summer, a number of landlords asked to see my credit score. They wanted to see my credit score, and I've actually heard that sometimes employers, before they actually hire somebody, will ask to see their credit score to base off of whether they're actually good with their finances or not. So it's just something all around that I think is generally good to have. Now, a problem that I've seen a lot of people have when they try to get credit cards or they try to build their credit is they apply for a card and they get denied. And they get denied because they don't have a credit score to show that they're a good borrower in the first place, so they can never get a credit card, and it kind of just creates this problem. It's kind of the same idea of if you apply for a job out of college and they say that you need to have 4 years of job experience, but you've never had a job, so how can you get into the job, right? It creates this problem. The way to get around this problem is to essentially sign up for something called a secured line of credit. So this is a secured credit card, and the way that this functions is that you essentially need to think of it as an apartment or renting a house, and you give them a deposit up front to essentially, if you make any damages, then they can just hold that deposit against you, right? Same thing goes with a secured line of credit, and this is how a lot of people can get into credit cards in the beginning, okay? And so you give them, say, $200 for your secured line of credit. You can do this by walking into your bank later today, or you can do it by going online and just doing a quick Google search on secured credit cards, okay? And once you do this and you give them a deposit of, say, $100, $200, $500, whatever your heart desires for your credit line, then they're going to say, okay, you gave us $200, and now we have your security deposit. Here's your credit card. You can spend up to $200 per month. And once you show that you're able to pay off that bill every single month for consecutive months, you'll get your $200 back and you're in the credit card game. You're going to build a credit score, okay? And it usually takes at least 6 months to start building a credit score. It takes a little bit of time. This is one thing that, some people don't like, but it's going to take time to build credit, and that's the truth. There's no way around that. There are some hacks you can use that I'll share with you later in this video, but it's still going to be difficult to build it insanely fast, okay? Everything with credit takes time, okay? So that's how you get your secured line of credit, and then eventually you can venture into other credit cards if you wanted to. But the key here is to always remember to never, ever carry a balance on your credit cards. As soon as you start to carry a balance, and this happens with a lot of my friends from college, they'll get credit cards, they'll carry a balance. And as soon as you do this, this is where the credit card companies make all their money. Now, you're not going to do this because you're watching this video and you watch these videos on this channel and you know that you don't want to do that, okay? So pay off your entire credit card bill at the end of the month, every single month. Don't pay the minimum payment. The minimum payment is what gets people into this hole of getting more debt and paying 25% interest rates. pay more than the minimum payment. Pay the whole thing off at the end of the month, every single month, and that's automatically going to start to build your credit score a lot faster. So look, there's a lot of power to having credit scores. There's a lot of power to having credit cards and using them correctly. But these are the 5 key elements that you want to think about that go into your FICO credit score, which can range anywhere from 300 points to 850 points. And I'll give you a little hint here. If your credit score is below 600, that's not good. That's not good at all. And there's actually a range here. I'll just throw it up on the screen so that you can see it because I can't remember the exact numbers for each and every category. But generally speaking, if you're over 750 points for a credit score, that's going to be excellent credit. That's going to essentially mean that you can get the best interest rates when you're getting a home, when you're getting a car loan, and you're going to be in a really, really good position financially from the perspective of credit scores. Okay? Now, let's talk about these 5 here. And the first one is your payment history. So this makes up 35% of your entire credit score is factored in by the idea of payment history. So this means that if you're paying your bills off every single month consecutively and you don't miss your bills, this is going to really boost your credit score a lot. So this is one thing that I think is helpful to do this is just by setting up auto pay with your credit cards. Okay, so simply just using auto pay. You want to be careful with this though. If you're living paycheck to paycheck and you don't have a lot of money in your bank account, sometimes it gets close to zero. Maybe you don't want to do auto pay. I know that I do it because I have a pretty nice cushion there between the money that's in my bank account and not going below zero. Because if you do auto pay and you pay a credit card, and you have an overdraft fee of $35 on your bank account, then that's really going to suck. So only do auto pay if you can afford to do it, but it's going to help you with your payment history so that you don't forget to pay your bills every single month. Because to be honest, I've forgotten in the past, and the simple fix to that is just call up the credit card company, say, hey, I forgot to pay my bill yesterday. Can you do anything about it? And they'll say, sure, we can just pretend like you paid it yesterday anyway, and then they'll just say that you did miss a payment. And this is really good for helping you, but they're not always going to do that. They'll probably only going to do it once, and then it's going to start docking you points on your credit score every time you miss a payment, okay? So 35% goes into that. Then we have 30% that goes towards amounts owed, okay? Now for this, this is essentially your credit utilization. Now, the way to think about this is if you have a credit line of $500 and you are spending $499 per month on that credit card, that's going to show a lot of these credit card companies and these lenders that, you know, you're actually kind of a risky borrower. Because here's this person who's using all of the money that we're lending them to go buy things, and it just creates more risk all around for the lenders. So in general, what you'll see with all 5 of these is that you want to become the least risky borrower for that credit card company or for that lender, okay? So you'll find that. So if you're wondering, oh, is this going to affect my credit score positively or negatively, just think, would this, in the eyes of the lender, would this create more risk for them? And if you're spending $499 per month on a $500 credit limit, then it's going to create more risk. Okay, so you want to have your credit utilization as low as possible. I like to say around 10% or lower for your credit utilization. I've seen people who will just buy a pack of gum every month at the grocery store with their credit card, and that will get them to a nice credit utilization rate. But I like to spend 10% or less on that. You know, I've seen people spend 20%, 30%. That can be okay, but just know that as your utilization rate goes up, so if you're spending 50% of your credit line, if maybe you have $1,000 for a credit line and you're spending $500, it's going to start to really affect your credit score negatively because you're borrowing a lot of money compared to what they're allowing you to borrow. Okay, so 10% or lower is what I like to go for. I've seen people have different opinions about this, but generally lower is better. Okay, now the next thing that we're going to discuss is your length of credit history. And this is one that you don't have a lot of control over, but you do have control over the fact that just opening up a credit card, getting some type of line of credit is going to put you in a good position here. So the longer you have credit, this is going to help your score more, okay? So if you just opened up a card 6 months ago, or you just got your first loan a year ago, your score is going to be a little bit lower, and over time it's going to start building up, assuming that you don't open up a bunch of lines of credit, because they take the average of all of your lines of credit, put them together, and that is what's going to make up that part of the score. So then coming in at about 10% of your credit score is your new credit, okay? And this is also seen as inquiries. So if you are doing a lot of hard pulls or inquiries on your credit, that's going to kind of show a lot of these credit bureaus that you're a little bit riskier, because if you're trying to open up 20 new credit cards in a week, that's going to pull up some red flags for a lot of companies. Like, why does this person need 20 new credit cards this week? Red flag, right? And so the way to kind of boost this area is to not try to apply for too many credit cards too soon. Don't try to get too many loans at the same time. If you're trying to get a home mortgage, an auto loan, a bunch of credit cards at the same time, it's going to drop in this 10% area of your credit score. It's going to hurt it, okay? So you want to try to not have too many hard pulls, hard inquiries on your credit. Now, there is soft pulls, and what this is, you know, if you go onto your banking app or your credit card app and you look at your credit score on there, that's a soft pull, that's a soft inquiry, and that's not going to hurt your credit score, but a hard pull will, and that's generally when you're applying for new credit. That's going to be when it's going to be a hard pull. Okay, so try to avoid those. Don't have too many of them. Obviously, you need to have hard pulls in your credit from time to time if you're getting a new loan, but it's something you want to think about. And then finally, we look at our credit mix, and this is another one that is difficult to really kind of game the system here, because what they're going to factor in here is looking at different types of credit that you have. Okay, so if you have credit cards and then you also have a student loan, you have a home mortgage, you have a personal loan, an auto loan, kind of the more that you have, the better in general. But you know, this is not something you can just like go get a new personal loan because you wanted to get a higher area for your credit mix, which makes up 10% of your FICO score. It's just something that you want to just remember, keep in the back of your mind, but it's not something you can really kind of have a big effect on unless you just go out of your way to open up new lines of credit, which I wouldn't suggest doing just to boost your credit score. So those are the 5 big keys when it comes to your FICO score. I've seen some different kind of strategies that people use. One thing that I've discussed with people in the past is by having somebody add you as an authorized user to their card, to their credit card, and then in a sense you can in some cases inherit that person's credit history. Now, not entirely, and it doesn't always work smoothly, but I've seen it happen for people. But you want to remember with this, and you can look into this further. Quick Google search will help you find the solution here. But you want to be careful with this, because if you're inheriting somebody's bad credit by becoming an authorized user on their credit card, you're also inheriting the bad parts of it too, okay? So, you know, if your parent, say, or your sibling or your son or your daughter, I don't know, has bad credit and they add you as an authorized user, you can actually end up inheriting that bad credit. But if they have really good credit, you could get a boost from that. And I've seen that work really well for people in the past, but it's just something you want to look into a little bit on your own, okay? So those are the keys to building a credit score as high and fast as possible. That's what I did to boost my credit score. I don't use credit cards all the time. I don't use them for that many bills, but it is nice to get some cash back. It is nice to use those credit cards to fly to different areas in the world for totally free, but it's all by being proactive about this, gaming the system, and not falling victim to a lot of these card companies that are just trying to get people into debt and then reap tons of money from people who are poor. I just don't like that. But if you do it correctly, you can win with credit cards. You can win with credit in general. But that's essentially this video. Thanks for watching. Appreciate all the support. Thanks for subscribing. Thanks for dropping a like or whatever else, I guess, commenting. Thank you, and I'll see everybody in next week's video.